Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and I'm recording this on Thursday, October 30th, while the markets are open. And before we get into the charts, I want to highlight the fact that today we're going to be talking about the trade of the week, which was a long put position in PepsiCo. And the reason we highlight the trade of the week is so you could see how the trade was set up, what the charts were showing us at the time of the trade, and the reasons for getting out of the trade, all based on the 7-point trading checklist. So let's get to the market. This is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And as I mentioned, the markets are still open. We have a pivot right here, lower high, lower low. We have a wide divergence from the 20-period moving average. We have the stochastic pivoting lower, almost at a sell signal. The CCI is also pivoting lower, very close to a sell signal. We're about 6.5 points away from that, generating a sell signal. And if we take a look at where my target is, it's still down there at 455.57. Why am I keeping that target in place? I'll show you why. If we look at the monthly chart, you can see that we do have this long stretch of green, and I believe we're going to see a drop in volume next month with these oscillators being overbought. And as you can see here, that itty bitty little diagonal line right there is my downside target looking at the monthly chart. So you can see that's a reasonable target, and there's really no reason for me to remove that, at least not yet, because we are seeing a wide divergence on the monthly candle as well. And I think we could go a lot further to the downside after that target hits. But it's always a good idea to take a step back, look at the daily, look at the weekly if you have to, look at the monthly. And you can see IWM on the monthly showing the shooting star long stretch of green. We haven't had a stretch of green like that, known as a stale green light, until you go back to this area right here. And then what happened shortly after that long stretch of green? We had a pretty aggressive sell-off. And I am expecting this whole area here, this down leg, to duplicate. I've mentioned that a few times over the last 3 weeks. And so this is why we're keeping that downside target. Now, if I look at the daily chart, you're going to see that my downside target here at 238.47, it's on its way to being hit. Down below, we crossed below the zero line on the CCI. Remember that zero line, also known as the momentum line, is an indication that the momentum is shifting to the downside. So we generally get 2 to 4 days of downward movement, again, in the direction of that cross. So we're keeping that target in place as well. Looking at QQQ, this one took a pretty big hit today due to the fact that Meta missed on their earnings. Microsoft disappointed on the earnings. And as you can see here from Meta, I'll pull that chart up, took a big hit today. And this is a mega cap stock. Microsoft also took a downturn after earnings. Now, this is the second largest mega cap stock out there, over $4 trillion, right behind NVIDIA, if you could believe that. And so between Meta and Microsoft, that's putting some pressure on the major markets, but the Dow is actually holding up fairly well. Right now, as I'm recording this, we're up about 60 points. I don't think that's going to hold until the close, but we'll have to see. I think the balancing act came through when Alphabet Inc., also known or formerly known as Google, they rallied. So between these mega cap stocks, 2 down, 1 up on the earnings count, I think this is why the markets are not selling off extremely hard. If Google would have disappointed, then I think we'd be obviously a lot lower. Now, speaking of that, let's go to the SPY. And I want to show you what we're seeing here. We have a downside target all the way down here at 653.89. But again, we have this pivot. We haven't had a pivot like that in a while. And so we're looking for at the very least in the short term, a pullback to fill these gaps and maybe a bounce off the moving average, and then a continued ABCD pattern with D being closer to my target down there. Now, if we look at the VIX, and I'll take a look at Bitcoin and the precious metals for you as well. If you look at the VIX, you can see that we're seeing a lot of green starting to show up, and the stochastic is starting to move up. I did a presentation today for the Bank of Nova Scotia clients there, talking about the value of the VIX as not just a leading indicator to give us an indication of when the fear is starting to creep in, but more of a risk management tool. When you start to see the VIX rally, you will most definitely see pressure coming in on the S&P. Now, I have an upside target on the VIX at $25. However, there's still an open gap all the way at 36.85 on the VIX, which I've given a guarantee will fill. We just don't know when. Now, that is because the VIX is not a stock. It's an oscillating index. And according to history, every single one of the gaps that were left open on the VIX eventually filled. So when you have a gap staring you down on the upside, you have to be very cautious of the downside, especially on the S&P. Remember, I talked about Bitcoin and the precious metals. Let's start with Bitcoin. We did a two-part forecast yesterday during the rapid fire session where I put a downside target of 108,656, and that is already hit today. That's a pretty big move for Bitcoin, down about 3%. However, we have a support level down here, and I do believe that once we get the pivots on the oscillators, we're going to see a move back up to my target right here on Bitcoin at 113,302. And so for those who are out there trading crypto stocks, Bitcoin-related stocks, it's pretty much going to look the same now that downside targets are hit. I would expect next week to see at least a bounce in some of the crypto stocks out there. So I know a lot of people are opening up cryptocurrency stocks through Crypto.com, through Coinbase and such. So I figure this will give you some added value in the weekly market report if I talk about this. Let's talk about SLV. I talked about this on the midweek report last night about why I'm moving parts of my position, or almost half, not quite there yet, from SLV to PSLV. I'm going to be writing an article for ZeroHedge this weekend that will be published Monday morning, so be sure to catch ZeroHedge. I'm usually found on the contributors tab, coming out at around 8:30 a.m. Eastern time. So there's a lot of very important information I'm going to be putting out in that article, so stay tuned to ZeroHedge. I have my bounce happening here off of this fan line. It's the number 2 fan line right here. And I have an upside target on SLV at 47.06 before this gap starts to fill. Might see a little bit of profit taking at that area, but I'm still very much a bull long term. I think silver could actually double from these levels right here. I'm positioning in that line of thinking as I add to my long silver position. And so the other one I want to look at is PSLV, because I've been talking about that. And you can see that here as well, we're getting this beautiful bounce. I have an upside target on PSLV at 17.25. So keep your eye on that. Now, as I said, I want to highlight the trade of the week. This time it's in PepsiCo, ticker symbol PEP, where on October 21st, we bought the January 145 puts at $2.55. This went out to our member base through the Matrix service. And as of yesterday, October 29th, those puts were trading for $5, making that a big winner at 96.7% to the upside. Now, my main reason for showing you the trade of the week is not to obviously brag about the position, which is an absolutely great position, but to show you the signals that we were looking at on October 21st that prompted us to buy the January 140 puts. So right here is the day the trade publication went out. Prior to this day, you can see that we have a hanging man candle, which is a small-bodied candle found at the end of an upward leg with a small shadow that's about 1.5 times the length of the body. And so that was what we were looking at on this big red candle day. Now, once this candle showed up, we had a lift in volume down here telling us that the sellers were motivated. In addition to that, the stochastic was about to cross with a sell signal, and the CCI had already crossed with the sell signal. Keep in mind that the CCI usually leads the stochastic with its signals, and being that we had such a wide divergence from that 20-period moving average with a gap below the market, that made it a prime candidate for a put. Now, again, why would we get out of this position? Well, look at the gap. Look at the gap fill right here with that long shadow candle very close to a hammer, which is bullish. So the trade is basically done, and it's a good thing because look what's happening today. Today we have a bullish harami. I'm not taking a long position, but if anyone were to think about taking a long position, that candle is supporting the idea along with the CCI starting to move up. So what do? We follow the 7-point trading checklist. And once we do that, we learn how to manage risk. When trading options, we put a risk per option into the calculation, telling us exactly how many options we get to buy. So if you're interested in becoming a member, at least for a couple of weeks, we have a free trial membership. You can go back and listen to all the recordings from the trade publications that have gone out, the webinars. You have access to our educational content through StickyTrades University. At the end of 2 weeks, you have the ability to enroll or not. If not, then it just expires. There's no pressure, no credit cards, nothing. You just go on your merry way and come back to YouTube and follow me here. So we're trying to make it as attractive as we possibly can for people to come in, at least kick the tires with the free membership. And that is where we are. So that is the end of this report on October 30th. Have a great Halloween tomorrow and a weekend to follow. And we'll talk to you in the next video. So long.
In a world of endless data, where every second counts, introducing Nod Live, your professional compass in the chaos of the stock market. Nod Live cuts through the noise. Stay ahead with Nod Live.